Hi, my name is Bill Winspear. I'm a tax attorney from Buffalo, New York, and I'm here to talk to you about the IRS's Offer In Compromise program. This is a solution to an IRS collection case where you make the IRS an offer for less than you owe them, less than the full amount you owe them. If the IRS accepts your offer, you don't have to pay them the rest. It's a great solution when it works. It can be a somewhat drawn-out process. It can take 6 months to a year to get an answer from the IRS once you're into that program, and it can require a detailed and lengthy financial analysis, and it can require some significant amount of back and forth with the IRS once you're in the program to find the right number that they're willing to accept for an offer. In a nutshell, the IRS has a mathematical formula that they look at. They want 80% of the value of your assets plus your value of your future income. They combine those two numbers, and that is the offer amount. It doesn't matter how much you owe the IRS. You could owe them $100,000, you could owe them $10 million. That part of it doesn't play into this process at all unless the equation yields a number, an offer amount, value of your assets plus your income, gives the IRS a number that exceeds the amount you owe them. So they do their calculation. You offered them a certain amount of money, less than you owed them. They did their analysis. They come back and say, well, your offer amount actually should exceed the amount you owe us. Therefore, we're not going to take an offer. You have to pay us everything you owe us. That's what they're going to say. So the equation is, as I said, 80% of your assets plus your future income. So how that works is the IRS looks at your assets, determines their fair market value, and actually you'll determine your own fair market value. They'll require you to submit documentation to support the value of your assets. So your value of asset, fair market value, times 80% minus liens that are senior to the IRS equals a number. That number is the first step in the equation to what you're going to offer them. The second step is your income analysis. Your monthly income minus your expenses to live on, necessary living expenses, the IRS calls it, equals a number. That number times 12 is the future income component in most cases. So as a quick example, let's say the only asset you have is a $10,000 truck. Fair market value of that truck is $10,000. There's no liens on it except the IRS liens. 10,000 times 80% is 8,000. That's your only asset. Your starting point for an offer is 8,000. Your income minus your necessary living expenses leaves a surplus dollar amount per month of $1,000. Times 12 is $12,000. Add the $12,000 to the $8,000 for the truck. That's $20,000. That's your offer amount, your starting offer amount. If the IRS verifies all that information and agrees those are the correct numbers, and you owed $50,000 in taxes, let's say, the IRS could potentially accept your $20,000 offer. They're going to require a $150 filing fee, which they keep for themselves, and they're going to require 20% down payment upfront to consider the offer. So if your offer is $20,000, you have to send in $4,000 with the offer forms and another check for $150, and it goes to the IRS's Offer In Compromise unit. From there, it'll take 6 months to a year, depending on their workload, to give you an answer. If they agree with you, we accept your offer, they'll send you a letter. We've accepted your offer. You'll have up to 5 months to pay the remaining portion of the offer amount, $16,000. You've already paid 4 from the 20, leaves 16. You have to send that in with 5 months. If you can do that, then you're relieved of the other $30,000 of liability. There's some future compliance clause strings. You can't owe them any money for 5 years. So for the next 5 years, you have to file all your tax returns on time. You have to pay all your taxes on time. They're also going to keep the refund, if you're entitled to a tax refund in the year they accept the offer, as sort of icing on the cake for them. So that basically, in a nutshell, is how an offer in compromise works. You can see the formula. It's actually laid out for you on their form 433-OIC. And if you have any more questions, or you need any assistance with your offers, feel free to give us a call.